Hello, world. You are now tuned into What's the Realty in Realty. I'm your host, Annalisa Carter, Realtor and Neighborhood Economist. I'm here with my co-host, the illustrious real estate coach, Tyrone Whitby. Welcome to this podcast where we discuss all things real estate.
Hi, guys. Welcome to What's the Realty in Realty. I'm your host, Annalisa Carter, Realtor and Neighborhood Economist. I am here with my illustrious co-host, masterful coach, Tyrone Whitby. We have a special guest for you today, Mia McFarland from New Hope Credit Solutions.
Hello.
So here at What's the Realty in Realty, we discuss all things real estate. We're based in the Washington, D.C. area. We cover Washington, D.C., Maryland, and Northern Virginia. And we talk about the current market, trends, investments, and so much more. So in this episode, we'll focus on preparing buyer's process, more specifically on credit. This is a piece right before you get your pre-approval. So Mia from New Hope Credit Solutions will talk about the importance of credit and the things that you need to do to improve your credit that's going to lead you to the pre-approval. So Mia, can you tell us a little bit about yourself and New Hope?
Yes, I sure can. Thank you both for having me today. New Hope Credit Solutions is based here in the Washington, D.C. area, but we can service anyone across the country that needs credit repair and credit rebuilding. It started with a college friend of mine, started the company. I came on doing some part-time marketing work, started to like it. And as things happened, here I am full-time working with individuals to help them learn about their credit, more importantly, repair their credit and learn, share information and learn how to keep their credit where it needs to be.
That's very important. Tyrone, since you've been in the business for a long time, what would you say to any previous clients that you've had about just preparing them for the home buying process and really starting with credit?
Well, I would say think about what their big why is, number one, because there can be many bumps and hiccups along the way. That home purchase isn't necessarily a destination, it's a journey. And you have to know that there's going to be some forks in the road. There can be some hiccups depending on your credit profile and what Mia discovers as she works with you. If you have credit challenges, know that it's not if you will become a homeowner. The question is when.
Yeah, you have to have endurance.
So yeah, you have to be flexible, patient, and understanding. And you have to be willing to fight to be able to leave a legacy of home ownership to your family. So I would say just have an open mind, just be flexible, and know that sometimes you may need to provide documentation more than one time. So, to get frustrated and, well, I sent them so. I don't see why I got to send it. I'm not sending it again. And that's not going to get you in the house.
Right.
That's not going to work. So be flexible, patient, and understanding. And remember that people are loaning hundreds of thousands of dollars of their money or other investors' money.
Yeah. But there's light at the end of the tunnel. Of course, this is obtainable.
Did I make it all sound bad? I wasn't trying to discourage anyone.
It's very Johnson. This is the realty.
That's what you said.
So it can be a bit daunting, but that is why Mia and her company are here to help you walk through the process. And so are we to help our buyers as well. So we work, very closely in making sure our buyers understand the process, just go through it as smoothly as possible. And so you have people to guide you. Just wanted to put that out there. So here at What's the Realty in Realty, we want to educate our audience and some things you would need to know as far as the minimum qualifications in obtaining a loan. So the minimum credit that you'll need clearly depends on the loan type. So the different loan types are your conventional loans, FHA, VA, or USDA. So for example, the FHA loan program allows for a minimum credit score of 580 or greater to meet the minimum down payment of 3.5%. And the same is true for conventional loans, which is 3%. However, most lenders mostly require about between 620, minimum score of 620 and 640 to qualify. Also, not only is credit important, but your debt to income ratio is important as well. So I want to kind of debunk that for you. So as it's written, the debt to income ratio is a personal finance measure that compares an individual monthly debt payment to their monthly gross income. So your gross income is your pay before taxes and other deductions are taken out. The debt to income ratio is the percentage of your gross monthly income that goes to paying your monthly debt payments. So the debt to income ratio, or DTI, is one of the metrics that lenders, including mortgage lenders, use to measure an individual's ability to manage monthly payments and repay debts. So how important is debt to income ratio along with credit?
It is very important because it's one of the three things that starts the process of when you're looking at buying a home. They're looking at your DTI, debt to income. They're looking at your credit score, and they're also looking at your deposit, your down payment. So those are three things you need to keep in mind with regards to that. It's like that perfect triangle. One doesn't miss the other. You have to start with, it all starts with credit.
Gotcha. Can you explain a little bit more about credit and why that's important in the home buying process?
Absolutely, because when you think about the home buying process, Tyrone said it the best. I mean, it's a beautiful journey, but it also is an emotional journey. It's a personal journey. So you want to set yourself up on the right footing, I would say, because we've all been told no. And after so many no's, you're just like, oh, I'm done with it. I'm done with it. But it is important because when you're looking at it, you don't want to go find your house and then work backwards. You want to have a plan, and what your credit report and credit can be is that plan and that map to guide you along the journey. So I think that is where you want to make sure you take that step back and know that is, I tell clients, they come to me and it's like, Mia, I'm going to buy my house in 90 days. You brought me 10 years of bad credit. So if I had that fairy magic dust, I'd be in a whole nother business. But in all honesty, I walk them through that to have that realistic expectation with regards to credit and knowing what we can do to get you where you need to be. So that way you come to the table and you're prepared and ready.
That's good. Also, can you speak a little bit about how your credit affects your interest rate in buying homes?
Yes.
Can you touch on that a little bit?
Absolutely. So it starts and ends with credit. Your interest rate is determined by your credit score. So the lower the credit score, the higher the interest rate you'll have, which means the more money out of your pocket. And
monthly that you pay.
Yes, absolutely. Monthly that you pay. And if you're like me, I'm trying to preserve my dollars for the things I want to preserve it for. And being a new homeowner, there's things, depending on what type of house you buy, there are always the unexpected surprises. So again, part of that planning and knowing credit score matches, I would say even equals your interest rate. So be smart about it in the beginning.
That's good to know. So what are some ways potential buyers can increase their credit scores? And can you also break down the 5 different factors that make up your credit?
Absolutely. So the 5 different factors that go into your credit score are based on the accounts that are on your credit report. So everyone will say, oh, I have this credit score, I have that credit score. That is determined by the accounts that are on your credit report by the 5 factors, which are payment history. That accounts for 35% of your credit score being weighted every month. You have your utilization, how much you have in comparison to your balance to your limits each month. You also have 15% of which is your length of credit history. You got to have some age. You also look at that other 10% is the credit mix. You want to have a good balance of revolving, which are your credit cards, and installment, which are your student loans, your mortgage, car note, things starting with a balance and you're paying it down monthly. And the last 10% is that credit mix. You want to make, that last 10% for you is making sure you have new accounts. You want to have new accounts on there. And again, that is the 100% of the pie with regards to how your credit score is calculated each month. And the 2 most important, 65%, ladies and gentlemen, is that payment history is 35%. And that 30% is your balances, the amounts owed.
Okay. So the 35% covers your payment history as far as you paying your bills on time. And the other 30% covers what?
That covers your utilization. So each time, if you look at your credit card statement, look at this, there's a range on there. There's a statement due date, and then there's a payment date. You want to make sure you're paying by that statement due date, because that's when, let's say my account's with Discover. I'm paying Discover, they're saying my statement due date ends on the 28th of each month. So I need to pay by the 28th of that month, and making sure I don't have a high balance in comparison to my limit.
So that is very important too, to touch on that high balance there. So that's a part of the utilization. So yes, you make a payment, but you want to make sure you cover it at a certain percentage.
Yes,
Okay.
yes, absolutely. And that is very important to make sure time and time again that you're paying it on time, because if you're going for a house, when you're going, the lender's going to look at your history. Your history tells the story. Why would I loan you this mortgage, approve you for this mortgage, if you're not even showing you can pay on time with your other bills, your other responsibilities?
Okay. So keeping a low balance is very, very important.
Absolutely.
Okay. Anything else that you wanted to?
No, I think she. I think she gave a great explanation, and just as you think through why people's credit is scored the way that it's scored, so she gave us some reasons based on what their activity is and in terms of their payment record. I don't think a lot of people really realize that a big part of the credit is people are evaluating risk. And if someone is deemed a higher risk, typically their interest rates are more, they pay more over the long term. Sometimes they need more money up front if they're deemed a higher risk. So, risk and reward.
And it's interesting too, because your credit is not really determined by how much money you make. So if you make a lesser amount, you can have A1 credit, and if you make a lot of money, 6 figures, you can have bad credit. So that's not really indicative to your socioeconomic status or anything. It's just a matter of habit, how you pay your bills on time and the way in which you pay your bills on time, it seems like. Right?
Yeah, I would definitely say habit, and I would also say information. A lot of it is, there are a lot of myths. Like you gave the great definition of the debt to income. It's a lot of myths. I mean, your credit does not define you. Tyrone said that earlier. You can change, but you have to have the right information and understanding credit. And that's really what we focus on, because there's a lot of bad information out here that keep people stuck and prevent them from doing things.
And that's why we need you and your expertise in companies like yours. I do want to mention, not a shameless plug, but we work together. Clearly, I've used other credit repair agencies, and the difference between yours and others is, they kind of keep you in the process for a long time. You guys are extremely aggressive and looking at people's credit and making sure they have the proper tools and information, like you mentioned. How long does it take to see an increase in your credit?
I would say it would take, on average, we show 45 days, and that's a partnership. So it's our clients understanding what there's some things that my team and I are going to do, and there's some things that they need to do. And we discuss a lot of that when we do the onboarding, but you see that change in about 45 days. And if you really stick with our plan as at our partnership, you will be really well off in that 4 to 6 months time frame with regards to your goals of where you want to be with your home ownership journey.
So you're saying that a person needs to realize that they need to trust the process.
Trust the process, Tyrone. Yes.
Yeah, so it takes some time. It's not an overnight sensation, and it shouldn't at least take a full year or two to fix it.
It shouldn't be, but people, habits. We're talking about habits. We're talking habits.
A lot of us have been down that road, so we understand. Can you tell our audience how they can reach you?
Yes, you can give us a call at 1-800-483-0288. We're also on Instagram and Facebook. If you search, you'll see my face. Jeez, it's me.
Wonderful face.
And also at nhcreditsolutions.com. So you can check us out there. We're here in the DMV, but we can help you nationwide with regards to making home ownership a reality with you. But it all starts with your credit.
Thank you, Mia. Also, if you want to get in contact with us, if you have some specific topics that you want us to cover or specific questions, you can always reach out to us as well. You can email me at annalisacarter@kw.com, and that's spelled ANNALISA Carter, CARTER @kw.com. Or you can always DM me on Instagram, and that's Annalisa Sells DMV. And you can text me as well. I want you to be able to get in contact with me at 202-977-9343. There are many ways to get in contact with me, clearly, but we want to hear from you.
All of those except for coming and knocking on the
Personal time. It's very important to me.
That's not one of them.
But if you see me in the grocery store, please stop by. Ask me whatever you need to ask me. I'll be happy to help you. But yeah, so that's how you can contact me. So in our sessions, we always want to leave you with a gem. And here's a gem from Craig Reed. He writes, "A dream written down with a date becomes a goal. A goal broken down into steps becomes a plan. A plan backed by action makes your dreams come true." So if your dream is to own real estate, now is the time to prepare yourself, fix your credit, and make your realty dreams a reality. So this is the close of our episode, and we bid you adieu until our next episode of What's the Realty in Realty. We want to thank you, Tyrone and I want to thank you for coming, and hopefully this will be one of many sessions that we'll have. So thanks, Mia.
Thank you for having me.
Thank you, guys. Take care.